Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock with news the world's factories are signalling a quite varied status indications. But overall, February saw global manufacturing show signs of renewed vigour. Output expanded for a second consecutive month, supported by the first increase in new order intakes since June 2022. The outlook remained broadly positive overall, with optimism regarding the year ahead staying close to January's 9-month high. In China, there were 2 PMI surveys out. The official factory one wasn't very optimistic, but the private Caixin version reports improving and expanding factory conditions. It is more understandable in China why the two might vary. The official one focuses on large state organisations, the Caixin one more on private businesses. Still, the results are opposite to what you might have expected. The official version also covered their services sector, and that part reported an improving expansion. And it will be no surprise the Indian PMI rose in February, complementing its economic expansion. But the Japanese PMI reported deteriorating factory conditions. With an unexpected fall in new order levels, the widely watched American ISM PMI dipped deeper into contraction in February. The companion internationally benchmarked market PMI told a very different story, however, in the same market, swinging up sharply to an expansion, and this survey hasn't seen that since mid-2022. The driver? Well, it was a surge in new orders in this survey. The two surveys couldn't have been more different this month, an unusual set of views. And the widely watched University of Michigan Consumer Sentiment Survey for February is clearly upbeat, however. Euro area inflation fell in February, but not by as much as expected. It is now 2.6% on falling energy costs. Like everyone, they're finding the last mile hard to achieve. Meanwhile, the euro area jobless rate fell to a record low 6.2%. But these days, governments get little credit for keeping employment high, even when economic activity wavers. But in the sweep of economic history, it is a remarkable factor. The US Treasury 10-year yield starts today at 4.19%, an upper marginal 1 basis point from Saturday, but down 6 basis points from a week ago. In fact, it is now at a 3-week low. And the price of gold will start today at Saturday's higher level of $2,082 an ounce. That's also up from $2,038 an ounce a week ago. Oil prices a little changed at just over $79.50 a barrel in the US, while international Brent price is now just under $83.50 a barrel. Both are $3 higher than a week ago. And in a bid to try and raise the price, OPEC has extended its production cuts. And the Kiwi dollar starts today little changed at 61 US cents, but that's 1 cent lower than this time last week. Against the Aussie, we're holding at 93.6 Australian cents. Against the euro, we're firm slightly to 56.4 euro cents. That all means our trade-weighted index starts today at just on 70.4, a little change from Saturday, but it is down 100 basis points in a week. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston.